Hello everyone. Today we are going to discuss the AFM March 2020 paper, right? This information I have taken from the examiner's report. So when you click the link below my description, you can download the examiner's report of March 2020. I have done March 2020 paper. You can check my videos, the part 1, part 2 and part 3. And now I'm going to review that paper. So basically I'm going to tell you what are the common mistakes in this paper and how you can avoid these mistakes in the future. What are the common mistakes made by the candidates where they are losing marks, right? Make sure when you go through this paper, when you go through this review, this video, when you're checking, you have the question paper with you, right? So let's start, and it's going to be a very helpful for you to avoid your mistakes. So first, let's start with question 1. Question 1, part A, right? Part A asked what are the behavioral factors for such a high price in a tech industry, Matt Trevor's industry, right? So what happened is candidate ignored the behavioral aspect and wrote rational factors underpinning the corporate valuations, right? You should not write rational factors. This is behavioral. They are asking behavioral factors, right? Behavioral factors, if you see, they are irrational factors. They are emotional factors. So you have to mention about that. And if you have a good knowledge about behavioral finance, you can score well, right? And these are some of the common answers: the herd instinctive behavior, confirmation bias, and loss aversion bias. So these are some of the common answers which are visible in the candidates, right? Then we go to B. Now part B was a report, right? You're supposed to write a report. It has many parts. There were 4 parts into part B. So first part, right? We were asked to calculate to find the excess, right? We were selling the tech industry. Mattress tech industry has been sold. We want to find the excess by using the price earnings valuation. We have to compare this with the present value of the cash flows. So the common error which has been there is to ignore tax in the price earning valuation, right? Because we were given the pre-tax profit 80-20 in the ratio of 80-20. So after that we also have to deduct tax, right? It should be post-tax, not pre-tax. So that was a common error. So make sure you always take the implication of tax into account. Second part, B, right? The second part of B told you to find the combined company's cost of capital, right? Combined company's WACC. So what happened is, to score this has been fairly done well. You have to understand how to ungear and regear the cost of equity. You have to be very good with ungearing and regearing to score good in this, right? Then also in second, right? These are some common mistakes which I'm going to point out now in second part of B when we were calculating the combined company's cost of capital. So number 1, used asset beta to calculate the combined company's cost of equity. You cannot use asset beta. You need equity beta, right? You have to use equity beta to calculate the combined company's cost of equity, not asset beta. First you have to calculate asset beta, then you have to use that asset beta to find the equity beta. By using equity beta already you can find. So don't get confused between asset beta, equity beta, right? Know the distinctions, know that know the difference very clearly, what to use where. Next, when we were calculating, okay, the second mistake is using the combined debt. Combined debt means equity values, right, as weightings to calculate debt equity, sorry, using the combined debt to equity values as weightings to calculate the combined company's cost of capital instead of the acquiring company's debt equity weighting. What the question told? The question told you that the combined company's capital structure debt equity ratio will be same as the acquirer company's debt equity ratio in terms of the market value. But here, combined company, what they are doing is they are using the combined company's debt. They are adding the debt of both the companies and equity of both the companies. That what not the question asked you. Clearly, the question told you that you have to assume that it is same as the acquirer company. That is the best parlay, right? And another mistake, third mistake done was to use the pre-tax cost of debt in their weightings, average cost of capital working, right? Because in your case study, you have been given a pre-tax cost of debt, 9.8%. But you are supposed to find you when you use WACC, you have to take after tax, post-tax cost of debt, not pre-tax cost of debt. So you have to take out the tax effect, right? Which you ignored, right? Many of you have just taken that cost of debt of 9.8% only, but it should be post. So please in future avoid this kind of mistakes. Now let's go to third part of B. Third part of B asked to calculate the value, right? What is the value to the Westphal shareholder? So these are some of the common mistakes. First, ignored adjustments to the present value of the cash flows, right? Most of the candidates, they have correctly calculated the present value of the free cash flows up to that point, but after that there were some additional adjustments which has to be done to that, which most of them couldn't do it, right? Also, including deducting debt to determine value attributable to shareholders. You have to deduct the debt to find the value, right? And what are those other adjustments to the present value? You have to find you have to add your proceeds from the selling of the tech mattress tech sector, right? And you have to deduct debt. So all these adjustments has been ignored, right? Second, what is the second mistake? Second mistake is in the additional capital investment, right? So errors in calculating additional capital investment. They have clearly told that additional capital investment in the first year is 630, but but from year 2 to 4, it is based on 0.5% on the increasing sales revenue, right? So there, that calculation error has been done. And also omitting to discount the continuing value from year 5 onwards, that perpetuity part, perpetuity cash flow, they have omitted to discount back to year 0. It has to be discounted back to year 0 using the year 4's discount factor. So omitting that. Then the fourth part of B, it asked about strategic and the financial value of the accusation, right? So it has many parts to that. What happened is most of the candidate ignored at least one of the several aspects to the requirement, right? You were also told to write your assumptions, right? So it has been ignored. Your comments on any findings, your assumptions. Whereas we have seen the marking scheme, most of the marks are there, 3 to 4 marks are there in your assumptions, in your comments, right? So you cannot miss those marks. Next, stated the financial value added without, okay, they have clearly, they have the candidate have just stated that financial value is added, that's it, but they didn't question that, right? Without questioning where the sources of the value came from. You need to question the source always in any AFM paper. Whenever financial value is there, you need to question that where it is coming from, what is the source, right? And also the likelihood of achieving, what is the likelihood, what is the percentage of achieving this additional value? Is it likely that this financial value is being added, or there's a rare chance of it? So all this needs to be taken into account, right? And the mistake which I've always told not to do. Most of this is wasting time listing each of the variables in turn and commenting on their accuracy or assumption that they would remain constant without discussing the validity or reliability of these assumptions in more detail. So your job is not to list each variables, right? That sales revenue is assumed to be correct, and taxable depreciation is assumed to be correct, working capital is assumed to be correct, discount factor is assumed to be correct. That's not what you are supposed to do, right? That this is accurate, this is accurate, this is accurate. No, you have to discuss on the how valid it is or how reliable the assumptions are. Okay, then since this is a report, right, most of the candidate ignored the need for a conclusion. What happens when you don't put an introduction and conclusion? This is a report format. Professional marks will suffer, right? And you don't want that to happen, so don't ignore the conclusion. Please understand the importance of your introduction, your main body, and your conclusion. It's a report format, and in a report, conclusion is there. You need to include a conclusion. Then another problem comes in the introduction part, writing lengthy introductory paragraphs, wasting time there. I told you paragraph writing introduction only has to be around 3 to 4 lines or 2 to 3 sentences, that's it. Right? Your introduction and your conclusion should not be big. It should be very brief to the point. Mainly your introduction talks about what you're going to discuss throughout the report, that's it. And finally, question 1C, right? What did C asked? C asked about what are the factors that are going to decide that how you are going to finance this accusation, and you are going to finance this accusation, right, by cash, right? There is no other method. Clearly it is specified in the text in the case study that it's a cash offer, right? But still, even though it's given, most of the candidate, they discussed share for share exchange. Clearly it has been given that it's for cash, right, cash offer. But still, most of the candidates, they mistaken it, and they discussed, they thought that the question asked other ways of financing other than cash. That's not what the question asked. The question asked the factors. It's a cash offer, yes, but what are the factors that you need to take into account, right? So they discussed share for share exchange. Then they discussed whether the shareholders would accept such an offer, right? Whether the shareholders would accept share for share exchange. Then they discussed benefits and disadvantages of different payment methods. Like we have different payment like cash offer, share for share offer, cash and share offer, right? That were not asked for. So please read the requirements very carefully, read 2 3 times, right? You don't have to be in a hurry. Read the requirements until you are clearly satisfied that you have understood and you are answering it properly. Because because if you have interpret it wrongly, then your whole answer is a waste. So please read the requirements. The question didn't ask what are the other types of financing the accusation. The question asked what are the factors that needs to be taken into account when financing an accusation. Already they have clearly told in the case study it's a cash offer. So you don't have to discuss about share for share exchange. So these are the mistakes which needs to be avoided. Read the requirements carefully to avoid this kind of mistakes. Now let's go to question 2. Right? Question 2 is about a hedging. It's about exchange rate risk. So the first question asked about what are the rationale for communicating the policy of hedging to the stakeholders, and what are the reasons of hedging, right? So in this, what happened is A part ignored the real world implications of market imperfections, transaction cost, and other types of financial distress associated with foreign exchange fluctuations. Whenever you are given a question where whether to hedge or not, whether it's beneficial to hedge or not, whether it will increase shareholders value or not. You need to take into account, you need to explain these things. This has been repeated in many questions. The same, okay, the question has been changed, the wordings has been changed, but in the answer you will always see that they have mentioned about market imperfections, transaction cost, financial distress, because these are there in the real world, right? So you need to talk about it. You cannot just ignore it. Then let's go to part B of question 2. Part B, you have to calculate under forward, futures and options and recommend which one is the best strategy, right? So here what happened is most of the candidates, they correctly identified, they did the forward, but when it came to future and option, they struggled. This could be because of lack of knowledge, right? Lack of practice in this topic, future and option. Because future and option, they have many steps, but once you know the step, it is same. So you have to know the 4-5 steps are there and it goes in that order. You need to do it. You need to repeat both for future and option. It's very similar. It's just the little differences there. That's it. So the main thing is they're failing to indicate whether the company should go long or short on future, or buy or sell call rather than put option. So you need to decide this first. This is your first task when you get a future and option. When you get a future, what are you going to do? Long or short? Right? And your long or short on future depends on whether it's a foreign currency receipt or foreign currency payment. In this case, it is a foreign currency what receipt, right? So when it's a foreign currency receipt, you know what is the whether it's a long or a short on future, right? Let's come to the option. Buy or sell call rather than put option. So it's an option. It's a here also same question, foreign currency payment or receipt. This is a foreign currency receipt, so you will go for a call option or a put option. Call option, exactly. It's a call option because it's a receipt. So this things needs to be clearly identified. Next, let's go to the next one is number of contract. The requirement clearly told you you are supposed to round down, okay? Rounding the number of contracts downwards. They have clearly told. But what happened? Uh, candidate, they rounded it upwards. For example, like we got the number of contracts we got was 81.4, right? But candidates round it up to 82. But we are supposed to round it down to 81 because clearly they have told round down. Clearly they have told. So you cannot round up. If right, even if rounding up is okay, but still you will not get the marks because they have told round down. Next when confusion came was when calculating the closing future price. This is where most of the candidates struggled. Confusion in calculating the predicted future rate, the closing future price. Right? You need to know how to calculate the basis risk. You need to know, in this case, you need to convert the spot rate because it was dollar euro, right? So you need both the future and the spot to be quoted in the same way, right? So confusion came there. Most of the time confusion comes in. So make sure that you know how to calculate the closing future price. That is where most of the people go wrong, right? Next mistake is currency. Currency issues. You are keeping one in one currency, the other one in different currency, and then you are adding both or subtracting both. It's wrong. Make sure everything is in the same currency, in the home currency, finally at the end. And this case, it was euro. So the mistake what the candidate did was they calculate the foreign market hedge, the forward market hedge for the under hedge amount, right? Because under hedged amount they told that needs to be hedged using forward market. Okay, in the future hedge. Under hedge amount in the future hedge means under future the underhedged amount will be hedged using forward. So there they have used dollars, right? It was calculated in dollars, and this they have added without conversion to the euros receivable from the future contract. That's a very big mistake. Make sure always check your currency. Is it converted to euros? Are both in the same currency? Please check that. None. Let's the next one. The last part of question 2, 2C. What did 2C ask? It was for 4 marks. It was about the 3 days margin account, right? The future price kept changing in the 3 days. You are supposed to find the profit or loss. You are supposed to find the variation margin, right? In this case, there was no variation margin because we got 2 consecutive profits at the end. So what was the mistake? So the mistake was calculating initial margin requirement based on a single future contract. That means you are not multiplying by 81. That was the mistake you did. 81 was the number of contract. You are supposed to multiply by the number of contract to find the initial margin requirement, right? If so far I remember it was something 3,500 or 4,500. I'm not sure. I think it was 3,500. The initial margin. That has to be multiplied by 81. Most of you have just taken 3,500 only without multiplying by number of contracts, without multiplying by 81, right? Yeah, it was 3,500. So you have to multiply by 81. And second mistake what was done was you are supposed to find the daily profit or loss, right? So getting the daily profit or loss calculation in the wrong way around, with profits instead of losses and vice versa. That means for the losses you are writing profit, for the profit you are writing losses. How is that possible? How can it happen? This happens only when you have a lack of understanding how future works. What is happening to the prices? What at what price you are buying, at what price you are short, at what price you are long. You are buying at what and you are selling at what. If you are not clear in these two things, you don't know whether it's a profit or a loss. You are for profit you are taking loss, for loss you are taking profit. So this is also a mistake, right? So make sure that you know at what price you are buying, what is the opening, right? Because your opening future price, if you are buying at that, then your closing future price you are selling. So the difference, you know whether it's a profit or a loss. So that you are buying at what rate and selling at what, that you have to be very clear to find your profit and loss. Now let's go to question 3, right? Question 3 was about an investment appraisal, net present value, right? So question A, first part, what it asked you? It asked you to find the net present value, financial feasibility, financial acceptability means net present value only, using the chief executive officer's assumptions or presentation, right? So you have to find the net present value. So what are the common mistake? The common mistake was the timing of the project. So very few identified the unusual timing of the investment, which would commence in 1 year's time, right? This is not like a normal project starting at year 0. Remember that. That was the mistake. This is starting at year 1. From 1 onwards. So your initial investment will be in year 1, falling in year 1. That was the mistake. And the second mistake was balancing allowance has been omitted or it has been incorrectly worked out, right? Please work on your balancing allowance. when tax allowable depreciation is there. It will be there. Tax allowable depreciation, don't worry, right? You will be given a tax allowable depreciation. And when you're given a tax allowable depreciation, balancing allowance or charge will come. So balancing allowance, make sure you know how to work it out, right? And I have told you clearly how to get that balancing allowance, right? Now, the second part of A. So the second part of A, what did it ask? It asked to take the effect in the cash flow, right, or present value using the recession, right? There was a recession, right? And so what happened was, the mistake was correctly a calculated drop in present value, right? Candidate has correctly calculated that there's a drop in present value because they told that it will reduce by 40% if recession is taken into account. But what happened was they did not use the probabilities to calculate the expected net present value, right? The probabilities has not been taken into account. The 70-30, 70% recession, 30% there will not be a recession. So that 70-30 was not taken into account to find the expected net present value. That was the mistake. Just see the word, it was expected net present value, and you are given the probability. So you know how to use it. You should know how to use the probability when you want to find a expected net present value. The question didn't ask net present value. The question asked expected net present value, and you have been given probabilities. So you have to be smart enough to know why the probability is given and how to use the probability, right? And some of the candidates also thought mistakenly that it was a drop in revenue rather than a fall in present values. Please read the requirements properly, yeah. I have been repeating this many times, right? It's not a drop in revenue, it's a drop in present value. Next, the third part of A. What did it ask? Hmm? So in the third part, what happened? The mistake which they did was, right? They failed to recognize, right? This is based on you need, right? In this you need the second part. The second part of A. So they failed to recognize the 7-year life of this alternative project. So they are talking about alternative project here. Failed to recognize 7-year life of this alternative project started from year 2 onwards, which means the project ends in year 8, not 7, right? When project is starting from year 2, how can it end in 7? Yes, it's a 7-year life. So starting at 2 means it will end in year 8. And thus the present value of the annuity was incorrect. If you are taking year 7 instead of 8, then your annuity factor will be wrong. And right? So that's why you have to be very, very critical in which year you are taking, because your annuity factor depends on that year, right? The alternative project. And the second mistake was recommendation involved comparing the net present value calculated with the expected net present value from part A, the second part. You need to compare. Most of them they haven't compared. So just because it is given in the third part, don't think that in isolation you are going to answer the third part. You also need the answers from your previous part. That's why I always tell follow an order. Go answer the requirements in an order. For example, A. So first part you answer, then second, then third. Right? And basically when you are given many parts, for example under A, you are given first, second, third, fourth, fifth parts. It will be linked. There will be a link between the answer. right? All the parts will be linked. So make sure that you try to work on that. It's not isolated. They are not independent questions. They are dependent on each other. The same way we saw in question 1, the B part, the report, the B part, it included 4 parts. All the 4 parts are linked, right? Now, finally, the last part of question A, part A, the fourth part, right? The fourth part where we have to compare, right? Whether we have to sell off now or whether we have to find the present value if we get the government's permission, the government's grant in 1 year's time. So very few recognize that the concept can be sold in 1 year's time, right? And failed to incorporate either possibility into their expected net present value calculation. So if the government permission is not granted, it will be sold in 1 year's time. Very few recognize this fact, right? And this, so therefore they haven't incorporated this into their net present value calculation. Then the second mistake, okay, many candidates either did not discuss their results or just simply compared the outcome with selling the concept now without elaborating on the validity of their results. Always validity, you need to elaborate on the validity of the results. You just cannot simply compare one output with the other. You need to discuss the validity of it, right? Third, this is the most common mistake in any question, answering each sub requirement as a standalone without any oversight of the overall objective. Basically, even though it's a sub requirement, it's a different part, right? Still, they are linked. You have to take a big picture, the overall picture of it, right? And finally, the B part of question 3 talked about the rationale and the benefits of capital investment monitoring and what the audit, right? Post completion audit. So the mistake what the most candidate did was they mistook, okay, the capital investment monitoring to mean assessing whether a potential investment project should be accepted or not. Capital investment monitoring is not whether investment will be accepted or not. That is different and this is different, right? So you have to work on your knowledge part. What is a capital investment monitoring, right? Because if you make a mistake here, then your answer will be wrong. So that's it. This were all the common mistakes which was found in March 2020 paper, right? And I hope that you don't repeat these mistakes and you work on this part, right? Each sub requirement related, work on the tax, right? Every post tax, don't work on pre tax, right? Make sure it's in a report format. Your introduction is there, conclusion is there. Question on the validity, the sources, right? Just don't say that it is accurate or this is assumption is assumed to be correct, right? Question and work on the technical knowledge where you can see that there's a lack of technical knowledge. For example, especially in question 2, risk management, right? Make sure forward future options, buy sell at what rate, how to find the closing future price, because this all you will be keep on doing, right? Have to find closing future price. You need to know the option, the premium, and whether it's in the same currency. All this are the common mistakes, so make sure you don't repeat and work on this. And don't forget to subscribe to my channel, right? Hit that like button so that I know that my content is being liked and I keep creating more content. I know which of my contents are doing good, which are, and you value this content, right? So like, you can comment, and best of luck for your exam.